Good evening, ladies and gentlemen. I'm Vidya, moderator for the conference call. Welcome to Avanti Feeds Limited Q3FY23 results conference call hosted by KFin Technologies Limited. We have with us today from the management, Mr. A. Indra Kumar, Chairman and Managing Director, Mr. C. Ramachandra Rao, Joint Managing Director, Mr. Aluri Nikhilesh, Executive Director, Mrs. Santi Lata, GM Finance and Accounting, and Ms. Lakshmi Sharma, Senior Manager Corporate Affairs. As a reminder, all participants will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note, this conference is recorded. I would now like to hand over the floor to the management. Thank you, and over to you, sir.
Thank you, Vidya. Good evening, ladies and gentlemen. I extend a warm welcome for this investors conference call to review the unaudited financial results for the quarter 3 financial year 23. Along with me here are Sri Indra Kumar, Chairman and Managing Director, Mr. Nikhilesh Chowdhury, Executive Director, joining from France, and other team members. The results of Q3 FY23 are already with you for some time now, and we are sure that you would have gone through them. However, I would like to share with you some of the key indicators relevant for our discussion today. Consolidated financial results of Q3 FY23. The comparative performance of Q3 FY23 with that of Q2 FY23 and Q3 FY22 have been given in the presentation already circulated. Gross income in Q3 FY23 is 1,132 crores as compared to rupees 1,349 crores in the previous quarter Q2 FY23, a decrease of rupees 217 crores by 16%. Compared to Q3 FY22, gross income of rupees 1,088 crores, there is an increase of rupees 44 crores, which is by 4%. The PBT is rupees 96 crores in Q3 FY23 as compared to rupees 90 crores in Q2 FY23, an increase of rupees 6 crores by 7%, and compared to Q3 FY22, PBT of 66 crores, and there is an increase of rupees 30 crores by 45%. The consolidated results indicate net impact of several factors such as increase, decrease in income, expenditure, exceptional items, etc. relating to feed and frozen food division, which have been discussed in the following divisional performance of the units individually. Let me first pick up the standalone financial results of feed division for Q3 FY23 results. The gross income of the Q3 FY23 is 878 crores as compared to rupees 1,040 crores in the previous quarter of Q2 FY23, a decrease by rupees 162 crores, representing a decrease by 16%, mainly due to decrease in quantity of feed sales and early harvesting on account of disease rains, decrease in farm gate prices of bigger size shrimps compared to smaller size. The gross income in Q3 FY23 increased to 878 crores from 2,819 crores in the corresponding quarter of Q3 FY22, which increased by 59 crores, representing 7% due to increase in sales realization. The PBT for the Q3 FY23 is rupees 70 crores as compared to rupees 52 crores in Q2 FY23, an increase of rupees 18 crores by 35%, mainly due to stabilization of prices of major raw materials. The feed sales is reduced to 1,06,313 metric tons in Q3 FY23 as compared to 1,26,034 metric tons in Q2 FY23. The PBT in Q3 FY23 has increased by rupees 14 crores from rupees 38 crores in Q3 FY22, represented by 37%. As you know, the cost of raw materials constitutes major share of cost of feed production, particularly fish meal, soya bean meal, and wheat flour. The average raw material cost in terms of percentage for feed sales price was 83.61 in Q3FY23 as compared to 87.40 in Q3FY22 and 88.11% in Q2FY23, indicating a marginal decrease by about 3.7% as compared to Q3FY22 and 4.5% in Q2FY23. The average cost takes into consideration volatility of the major raw materials like fish meal, soybean meal, and wheat flour, sometimes increase and sometimes decrease during the respective quarters. The present rates of fish meal, soybean meal, and wheat flour are rupees 110, that is for fish meal, 57 kgs for soybean meal, and rupees 36 per wheat flour, per kg wheat flour. Now I would like to share with you some of the recent developments which has contributed to the cost of the raw materials. First, let me take the fish meal. There is a significant increase in the export of fish meal from India. The export of fish meal from India to countries like China, Taiwan, Vietnam, etc. has gone up steeply over the past 8 to 10 months, creating shortage in fish meal for domestic consumption. The spurt in demand for export is due to increase in import of fish meal from India by China, Taiwan, Vietnam due to shortage of production in Peru and also higher ocean freight from Peru compared to imports from India. Added to this, the Indian rupee has been depreciating against USD, giving a higher sales realization to the Indian exporters of fish meal. Further, the exports are incentivized by the duty drawback of 2.9% on FOB value and 2.30 of RODTP. The fish meal production in India is about 3.75 to 4 lakh tons per annum, and shrimp feed industry consumes almost 3 lakh metric tons per annum for feed production. 75 to 80% of fish meal is required for feed production in India. With the present trend of exports demand, almost 3 to 3.5 lakhs metric tons per annum are likely to be exported. This is of great disadvantage to the domestic consumers of fish meal, creating shortage, pushing up the domestic prices. To mitigate the hardship, the government of India is being approached to initiate measures to safeguard the domestic shrimp feed manufacturers in the interest of shrimp exports, earning value-added exports for foreign exchange. In this context, it is pertinent to mention that the recent budgetary decrease of customs duty on import of fish meal to 5% from 15% is not significant and advantageous to the domestic consumers. Let me now dwell upon the wheat flour price. Like fish meal, wheat flour prices also increasing steeply, which appears to be due to inconsistent policy of exports of wheat and wheat products during 2022. In anticipation of allowing exports of wheat and wheat products, the traders seem to hold these products, resulting in increase of wheat flour price. In order to check the rising domestic wheat and wheat products price, on 25th of January 23, the Government of India announced the sale of 30 lakh tons of wheat in the open market. Again, yesterday, that is 21st February 23, the center announced a sale of an additional 20 lakh tons wheat in the open market to further bring down the retail prices of wheat and wheat flour. The government has decided that the state-owned Food Corporation of India will offload an additional quantity of 20 lakh metric tons of wheat under open market sales scheme. Further, this year, that is 22-23 crop year, the wheat crop also estimated to rise to 112.18 metric tons as compared to 107.74 metric tons in the previous year. It is expected that these factors would influence the wheat floor prices and soften and stabilize hereafter. To sum up, I would like to share with you that prices of these major raw materials, along with related products like fish oil, soya lecithin, etc., keep changing from time to time, depending upon the seasonality, production, global trends, etc., which has a direct impact on the raw material cost of the feed beyond the company's control. Let me dwell with the shrimp processing division now. The Q3FY23 results, the gross income for for Q3 FY23 is rupees 256 crores as compared to rupees 310 crores in Q2 FY23, a decrease by rupees 54 crores, representing 17.7% due to decrease in sales volume by 627, representing 18%. The significant reason for the lower sales volume is lower sales volume in Q3 FY23 is postponement of shipments on buyer's request because of the inventory holding at their warehouses. The gross income in Q3 FY23 decreased to 256 crores from 270 crores compared to corresponding quarter Q3 FY22, a decrease of rupees 14 crores, representing 5.2%. Though the sales volume decreased by 18.2%, gross decreased by 5.2% only due to positive impacts of increase in average export realization by $0.29 per kg and foreign exchange gain due to depreciation of INR against USD. The PBT for Q3 FY23 is rupees 30 crores as compared to 40 crores in Q2 FY23, decreased by 10 crores, which represents 1.1% of gross income, mainly due to decrease in sales volume and average sales realization by 32 cents per kg. Having said that, the PBT has not decreased proportionately with gross income reduction. The company could able to maintain the PBT owing to increase in the foreign exchange gain and marginal decrease in ocean freight costs. The PBT in Q3 FY23 is 30 crores, increased from 26 crores in the corresponding quarter Q3 FY22. Provision for recall expenses in the financial statements. In Q3 FY23 financial statements, an additional provision of Rs 1.52 crores has been made as an exceptional item towards the value of returned destroyed products and other related expenses, with cumulative provision of 35.62 crores till 31st December 22, out of which an amount of 31.56 crores has been paid on the basis of claims, leaving the balance of 4.06 as a provision in the financial statements. As regards the product liability claims for bodily injury caused by consuming company's contaminated product under the recall, the company's insurer, New India Assurance Company, has appointed a surveyor for processing of the claims. So far, the company has received 13 claims towards bodily injury, which have been forwarded to the insurance surveyor for processing. Since the liability has been covered under the commercial general liability insurance policy, no provision has been made in the financial statements. The extent of claims in the financial term is yet to be ascertained. Now let me share with you the industry overview and future outlook. You may notice that in Q3 FY23, the feed division resulted in an increase of profit, though the sales have decreased, mainly due to stabilization of the prices of major raw materials during the quarter. The shrimp exports have also decreased in Q3 FY23 compared to Q2 FY23. The later part of the year 22 experienced severe stress on the shrimp culture industry by decrease in production of shrimps, farm gate prices going down, global recession, etc. The year 22 ended with a rather disappointing note for these reasons. Coming to the budgetary support to the industry in 2023 budget. As far as import duties and GST are concerned, the aquaculture industry did not receive much support from the 2023 budget presented on 1st February 23 by the Honorable Finance Minister, except the following. The import duty on fish meal has been reduced to 5% from 15%. However, this decrease has not helped the feed industry, as explained earlier. The import duty on fish lipid oil for manufacture of aquatic feed has also been reduced to 15% from 30%. However, this decrease is not also helpful to the feed industry on the same lines as in the case of fish meal. The import duty on krill meal for manufacture of aquatic feed has been reduced to 5% from 15%. This is also an expensive import item, and the decrease of 10% has not really helped the industry much on krill meal. The import duty on vitamins and mineral premixes used for the manufacture of aquatic feed has been reduced to 5% from 15%, which has provided a marginal benefit to the importers of vitamin and mineral premixes used for feed manufacture. The import duty on algal prime flour for manufacture of aquatic feed has been reduced to 15% from 30%, providing a marginal relief. The quantity of vitamins and mineral premixes, algal prime flour used in the feed manufacture is not significant, and as such, the decrease of duties of 10% or 15% does not give much relief expected by the feed manufacturers. Continuing this outlook, the year 22-23 started on a low key. The farmers did not show much interest and are reluctant to stock the seed, which otherwise would have started now briskly. As per the information available, up to mid-February 23, the stocking was 5,700 million seed as against the 5,700 million seed as against 7,800 million seed during the corresponding period of the previous year. According to the stocking went down by 26.92% in the first 45 days of the year. However, as the farm gate prices of shrimp is increasing, the farmers are looking for stocking from March 23rd onwards. It is anticipated that shrimp culture will pick up from March 23 to make up the shortfall in the first 2 months. However, to be cautious, with global economy looking bleak and recession looming large throughout the world, the shrimp production in 2023 is likely to be around 8.5 lakh metric tons as against 9 lakh metric tons in 2022. Let me now dwell upon shrimp production and feed consumption in financial year 22 and company plans for 23. Shrimp production consumption. Though at the start of the first season, the shrimp feed consumption in CY23 India is expected to grow by about 15% compared to the calendar year 21, with an estimated sales of 12 lakh metric tons. However, due to the various reasons stated earlier, the shrimp feed production in calendar year 22 is now expected to be 9.75 to 10 lakh metric tons as compared to 11 lakh metric tons in calendar year 21. The company's feed sales during the financial year 22 was about 5.41 lakhs metric tons as compared to 4.73 lakh metric tons in FY21. It is expected that for financial year 23, it would be around 5 lakh metric tons unless the shrimp culture in the rest of the year goes down steeply due to uncontrollable reasons. The company has completed setting up of a new shrimp feed manufacturing facility in Bandapuram with annual installed capacity of 1,75,000 metric tons with a capex of Rs 125 crores. The new facility has commenced production in December 22. With the new plant commencing production, there would not be short supply of company's feed during the peak season this year, as it happened in the previous year, which has resulted in a short supply of feed in the market to the extent of about 50,000 metric tons. Shrimp processing and export. Country's shrimp production and export has come down in calendar year 22 to about 6 to 6.5 lakh metric tons as compared to 7 to 7.5 metric tons in calendar year 21. The company's shrimp exports during financial year 22 was about 12,836 metric tons as compared to 11,518 metric tons in financial year 21. It is expected for financial 20 would be around same level of 12,500 metric tons. Avanti Frozen is in the process of expanding pre-processing and main processing as detailed below. Pre-processing facility in Gopalapuram adjacent to the existing processing plant. The status is completed and waiting for final approvals to start pre-processing capex of 11.43 crores. New processing plant and cold storage in Krishnapuram, East Godavari districts in Andhra Pradesh with 7,000 metric tons per annum capacity. Land is acquired and civil works commenced. The estimated cost of this project is 64.6 crores. The company has been selected under two investment incentive schemes of the Government of India. One is a sales-based incentive under production-linked incentive scheme. The other is granted aid under Operation Screen's long-term intervention scheme. The production-linked incentive scheme, company is eligible for the incentive of 6%, value-added products 10% on incremental sales over a period of 6 years from the financial year 21-22 to 2026 to 27, subject to a maximum of ₹79.44 crores with a minimum 5% CAGR in sales. The company has made a claim at 6% on the incremental sales of ₹57 crores for release of incentives under PLI for financial year 22, and it is under review by the ministry. This is not accounted for in the books of accounts as per the policy of the company to account such items only on receipt. The other scheme, Operational Green Scheme, approval from the Government of India for grant in aid for the proposed investment in new shrimp processing plant at Krishnapuram has been received in December 22. Maximum grant in aid under this scheme is ₹10 crores. Grant in aid will be released in 3 installments. Application for disbursement is requested to be submitted 8 months, 16 months and 24 months after the date of approval of the project. The outlook for coming quarters up to the feed processing division appears to be promising on account of softening of the ocean freights, increase in value-added products exports, and also with the Chinese market promising. It is hoped that the processing division would do better in the coming quarters. I think with this, I close the brief background that's with the setting the ground for discussion. Now we will go into the question and answer session.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. We will wait for a moment while the question queue assembles. The first question comes from Onkar Kulkarni from Shree Investments. Please go ahead.
Hello.
Yeah, yes.
Yeah, my question was regarding just now you mentioned that with the softening of raw material prices, the future seems to be bright. So what do you think, what could be your margins in the medium to long term? I mean, we are not able to gather like what kind of margin percentage you can deliver in the mid to long term because of so much of volatility in all the things.
I think the question has to be split into two. One is about the feed, the other about the processing. Let me first take up the feed division. As I explained very clearly in my presentation, that the raw material prices are likely to come down for the reasons, but which is very uncertain to what extent it will come down and what extent we'll be able to take advantage of that. These are all the factors which will only can be answered when the due course. The decision of the government to release the 30 plus 20, about 50 lakh tons of the wheat has come very recently. So we have to see how the market is going to react for this, whether the prices are going to come down or how it is going to happen. Similarly, we are trying to see the exports, the fish meal has really created a great disadvantage for the domestic consumers like the shrimp feed producers, because the prices are very high, export prices, which they are giving it about 150 rupees. So they are selling at 110 rupees per kg now, fish meal. So at this, whatever amount of the concession, that the difference is so huge that to divert them, a government has to come with a very strategic planning. So to save that, to provide the comfort to the domestic industries as far as the availability of fish meal is concerned. We are working on that. So, like the soybean also like that. Today and yesterday, the prices have gone up against soybean meal. The reason is not known why it has gone up. So these are all, as we have been telling almost in every our investors call, that these raw materials are very highly volatile, and it is very, very difficult to give you a precise the margins this is going to result in. And on the other side, as you know, that the pricing of feed is also not totally free from the certain conditions, regulations by the government. So we are on the both sides. We have a very stringent, conditions whereby we are operating. So under these circumstances, it is very difficult for giving you any specific percentage of the profit margin. Coming to the question of processing, here also there is always a mismatch between the raw materials, the farm gate prices, and the final export price. So there also we try our best to reduce our cost of processing and maximize the profitability. I think Indra Kumar, CMD, will explain more on this aspect.
See, the international market, everything depends on the international market situation and the openings of the different markets. As of now, because the recession and the inflation across the world, there is a pressure on the prices, and definitely within another 2 to 3 months, that would come to normalcy. And in the US, they have huge inventories, and because of China declared a complete lockdown and lifted it only in the month of December. So there has been the shrimp was not no item was exported to China because of the lockdown, and they declared 100% lockdown. Because of that, there was turbulence in the market because China constitutes around. They're the second largest importer of seafood, mainly shrimp. With the lockdown declaring, all the exporting countries and exporters have looked into single market of America, US. And as everybody knows about the Russian and Ukraine war, the European market is also very volatile. Definitely, because of that, the shrimp farmers were a little skeptical of stocking in the beginning of this year, January, but slowly they're coming back for stocking. The prices looks stabilizing, and as of now, since our company is concentrating more on value-added products, we are able to sell, and the margins are quite reasonable. And if you look at the supply and demand, the supply of shrimp for the processing plants is very low now, because in the end of 22, because of the cyclones or the disease and also the Chinese lockdown, different the farmers were slow in stocking, and so that the raw material availability has come down right now. the farmers are going back to stocking and it will stabilize.
Okay, this is about margins, but what about the revenue front? I mean, with all the headwinds you have, what kind of revenue you are expecting, at least for medium term, given the market conditions?
What the revenues will be the same as last year. Maybe there won't be much increase. Their revenue may be around 5% or 10% more, or similar as last year, because seeing the world situation, entire world situation, we cannot expect much jump in the revenues.
So here I'm asking you about the overall revenue.
Yeah, overall revenue. Yeah. Yeah, what seems to see most of our customers are long-standing customers, and they have the tie-ups. They are in the US a long time, so we are able to cater to them. They are more consistent buyers. So as far as the demand for the product, say exports for the company is concerned, we do not foresee any big headwinds in the export market as far as the company is concerned.
Yeah, but my question was regarding a little bit long term, around 2 to 3 years. What kind of revenue you are expecting with, given all the headwinds you have?
The company is working on increasing the revenues. That's why we are expanding the production capacities and also going in for value-added products. And we have to see the market situations and the world situation.
Correct. With the additional...
Hello?
Yeah, hello.
Just to add in on the long term for 2 to 3 years, we are adding in additional capacity to produce more value-added products. And once we do that, these kind of value-added products require high pre-processing activity, because a lot of the preparation is being done in-house, so the consumer can consume the product without much preparation on their side. So that's the reason why we're expanding the pre-processing capacity. So on 2 to 3 years horizon, we have already started taking in new product orders. We have already started shipping out some of these orders. But the market needs to develop for these orders, and we need to develop the recognition in the market for these kind of products. The trial orders have already started going out. So on 2 to 3 years horizon, when it becomes fully commercialized, there will be higher revenues in this segment. We're also, that is for one, we've started 2 to 3 categories of value-added products which need to get into full commercialization. Once they do, we can expect a higher level of realization from the current level, and also an increase in revenue. But the quantity could not increase as much, the volume, because we're producing high value products, so the quantity might not increase as much, but the value will increase.
And with the additional capacities commencing very recently, what kind of asset turn you are expecting on that?
What did you asset turn?
Yeah, asset turnover ratio. How much you can how much your revenue could increase because of those additional facilities coming up?
It's very hard to put a number to it right now, because like I was saying, it's a step-by-step process. It's a new product that we're introducing into the market. So we need to gain recognition for producing such kind of products. So I wouldn't put a number to it right now, but I would say as per strategy is to diversify our product portfolio to enable higher margins and revenue. So right now I can't put a number because they're in very early stage of even the construction.
Okay, that's a process. But as far as the feed is concerned, your capacities have gone up, right? You have recently increased your capacities. So on that also, how much revenue you can produce with those increased capacities?
We can produce, we have increased the capacity of 175,000 tons. Because of the product mix, a product mix, and now what has happened, see, we have to upgrade to the technologies and what is required by the customer. So we are gearing up to that, and definitely last year in 2022 we could not supply to our customers because we didn't have capacity. So we have increased the capacity, and also due to the product mix, what we are trying to do in the market, the current requirement of the customer, say we are geared up for all the products what is required by the shrimp culture. In fact, say for example, earlier we used to supply the starter feed in a crumble form. Now we are doing it in a pellet form. So the productivity will come down, but the growth of the shrimp will be much better with good FCRs.
Another question. Yeah.
And if the shrimp culture, because of the world scenario, the shrimp culture has there is a little bit apprehension by the farmers, which they're coming out. So as the shrimp culture increases, we can increase our revenues.
So at full capacity utilization, how much more revenue you can generate with the additional capacity?
You cannot see, full capacity we can generate around I think 25% more.
Sorry, I missed the number. I missed the number which you talked about. Can you please tell me?
I cannot see with the 25% more on this.
Okay. All right. Another question which keeps coming back to the management for last, say, 2 to 3 years is the utilization of cash. And there have been plans about entering into new segments which haven't fructified. You haven't been utilizing the cash.
Yeah, Mr. Kulkarni, see, we have expanded our with our own generation, and we require the funds for the working capital. See, working capital requirement in this industry is very high. Very high. And please listen to us.
Sorry for interrupting you, sir. I request the participants to restrict with 2 questions in the initial round and join back the queue for more questions.
Yeah, I'll join back the queue, but let the management answer the current question at least.
Okay.
See, the capacity increase and the markets what we are planning to expand into the new segments, it requires a lot of study, which we are because of the COVID reason or different markets position, we have to go carefully.
Okay, so plans are still on, you mean?
Yeah, plans are still on.
And how much progress has been made about that?
See, please understand, we have to go cautiously. We have to see the market, and we have to supply what is required by the market. And when we are diversifying into other products, we need to study. We need to be very careful, and we need to work on success.
Okay, so that's what I'm asking. At what level you are in terms of that?
We are almost we once the markets are right, we can start the production and supply within 6 months.
Okay, all right. Thank you. I'll come back in the queue.
Thank you, sir. The next question comes from Vishwanath Shettigar, an individual investor. Please go ahead.
Hello. Hello. Am I audible?
Hello. Yes.
Yeah. So the first question is that right now the shrimp processing.
Your voice is very low, sir.
Hello. The shrimp processing segment contributes somewhere around 2.5% of the total revenue. So in terms of percentage, what do you feel that the processing segment would contribute, say, 5 years down the line?
No, it's not 2.5%, sir. We are almost 20% of the revenue.
It's 20% of the revenue?
Yeah.
So in terms of okay. Sorry. Yeah. Second thing that since as far as the pricing pressure is concerned, with regard to increasing shrimp feed price, like you, other players are also having similar issues that you cannot raise the price. Do you feel that when the prices of raw material goes down, there will be pressure again from government that you need to reduce the price?
So definitely there'll be, we have to see the market size, and you have to see the customer and your competitor. First you have to see the customer and the competitor. Well, we have to carefully see the pricing so that the customer is comfortable and we are able to market our products. See, we have competition and we have to see the one way, because the government also tries to interfere, because it's more of a agriculture nature and more of a political popular schemes. So we have to carefully handle all those things.
Okay. And last question is with regard to the falling ROE and ROCE, right? If you look at the company's ROE and ROCE, it's very low, right? It's below 10, right? So we need to work something around on that thing, because it's basically below cost of capital right now.
Yeah, because as we explained to you, the activity, the what you say, ROI, and depend on the revenues that we get, and the expenditure and net profits that we are going PBT and this one. So unless automatically once they improve, it also improves. So I think we have to bear with this. Unless you have better opportunities, we cannot go for any investment to get a better ROI and ROC.
So what is the management viewpoint with regard to long-term ROE? Where they want to be, say 5 years or 10 years down the line?
If you take in the segment of shrimp processing, we are working out on the value addition, higher value addition products, and where you're adding value to the products. And we get higher margins. And in the shrimp feed, we are also trying to working out. See, there's a lot of research is being done to reduce the cost of production, how it comes to, and improve the FCR.
Okay. And sorry, again, the last question with regard to hatchery. I've seen that you started with the hatchery. So what's the way forward on that front?
Yeah, the hatchery business has started to provide the shrimp farmer a good quality seed. And our hatchery capacity is not compared to the industry standards. So we are just started it. And we have started, by the time we got permissions and all these things, it took a long time. And we have started, the hatchery business would be around, we can scale it up to 1 billion capacity, which the revenue would be around approximately around 30 crore.
Okay. Yeah. That's it from my side.
Okay, 1 billion.
Thank you, sir. I request the participant to restrict with 2 questions in the initial round and join back the queue for more questions. The next question comes from Rahul Shah from Crown Capital. Please go ahead.
Does he have shares?
Mr. Rahul Shah, please go ahead.
Hello. Hi. Hi. My questions have kind of been answered on the guidance for the next year. So thank you. Thank you.
Thank you, sir. The next question comes from Jasdeep Walia from Clockwine. Please go ahead.
Hi. Thanks for taking my question. So we understand there's a demand issue on account of high inventory in US. But let's say if the demand were to come back, are there any issues which constrain production in India? For example, we have been hearing that there's a lot of disease issue with the shrimp, on account of which the farmers have not been able to scale up production even if they want. So just wanted your comments on that.
Yeah, no. Please come back again. Your voice is not clear, and please speak slowly because we could not understand your question.
Sure, sir. So I understand that there is a demand issue right now on account of high inventories in US. But let's say if the demand were to come back, are there any other issues in India which are constraining production? For example, we have been hearing that there is a lot of disease issue in India on account of which farmers may not be able to scale up production. Let's say if the demand were to come back. So just want to hear that.
That is not right. That is not right. If the demand is there and the price is there, India can scale up production.
Got it. So there is no broader issue with regard to disease, controlling disease.
Disease is there. The disease management also is there.
Got it. Got it. Thanks a lot, sir. That's all.
Thank you, sir. The next question comes from Ronav Shah from Equitas. Please go ahead.
Yes, sir. Thanks for the opportunity. So my questions are regarding two things. First is what is the current capacity utilization of our existing feed and processing plants, sir?
Feed plant we were utilizing around 98%. And now with the expanded capacity, we are almost because just now the season has started, we are at around 80%. Just because the season has started. If you talk about today, the season has just started. Not stocking has just started. We are working on an 80% capacity, and as days pass by, the stockings happen much more. We may touch around 90-95%.
Okay, sir. And for processing?
And the processing, we are operating at around 60-65% because we are concentrating more on value-added products. See, when the value-added products, the capacity is there, but the doing value addition is a major. It's a human. Actually, it's not machine-made. It is a human. Human cut and all these things.
Okay, sir.
Pardon me?
Yes, sir. Sorry?
Yeah, because of the capacity, because the customers want human man cuts. It is the process is either you can do by machine or by hand. They want handmade. Manual.
Okay, sir.
So the capacity would not be, we cannot touch 90% or something because it is manual. Human factories. Because of value addition, if it is a bulk, if it is a commodity side, we can touch around 80 to 90%. But it is a value addition. We are not able to. We have to. We are able to do around 60 to 65%.
Okay, so got it. And sir, in terms of processing division, what is the benefit in terms of if we are saying that we are focusing on the value-added products, how it benefits in terms of the realization? So what is the incremental realization which we can get from the value-added products, and what is the current proportion of the value-added products in the processing from exports, sir?
Niklesh, are you answering?
Yes, sir. I have two questions in this.
No. I'm answering.
One second. Could you repeat that, please?
Yes, sir. So what is the current proportion of the value-added products in our exports and processing division? And second is, what is the incremental realization which we can get from the value-added products from the normal exports?
Mutyam, could you give the breakup of what is the percentage of value-added exports?
Yeah. No, value-added. Value-added is much more.
Percentage of value.
It is around 24 to 25% of the value-added.
Okay.
So out of the total exports, about 25% is value-added. On a regular day, today we're facing kind of price pressure, but it should develop. I think we've reached the bottom of the pricing pressure, and it should start increasing from now. We can expect a double-digit margin on the value-added products and commodity high single-digit margin.
For you to understand a little bit more, earlier what we were doing value-added has become a commodity now.
Okay.
PDTO and PD, butterfly and all, earlier they were value-added. Now they have become commodity, and we have gone into higher products like cooked rings and all these things. Now they are called value-added.
Okay.
So we are taking the newest products as value addition. The ones which were earlier called value-added, we are taken into a commodity grade. In shrimp exports, there are different things. Headless shallon is a commodity product. And if the further value-added, the reveining and deshelling and all these things are supposed to be value-added. Now we are not taking as a value-added product for that. We are taking higher products like cooked products or skewers or different as a value-added.
Oh, got it, sir. And sir, last question from my end, sir. In US FDA case, at that time we have created some provision, and at that time there was incremental 80 million of provision. So, are we expecting any reversal of that in upcoming quarters?
No. Sir, can you please come back?
Repeat your question.
Please repeat the question.
Yes, sir. So in earlier quarters for the US FDA issue, we have created some provision in the books of accounts, and at that time we have on safer side created around 80 million of incremental provision. So are we expecting any reversal of the same in upcoming quarters?
Sir, not exactly reversal means what we are doing is depending upon the claims received from time to time during a particular quarter, we are making the provision. That particular quarter, if you have any additional claims, we make a provision for that. And when the claims are settled, we take that as the expenditure from the provision. So what we do now, it has almost come to the almost zero level now. Must be not much hereafter. So what we are intending to do is by 31st March, we will close all the claims that have been received so far and how much settlement is there. Whatever is, if there is an excess provision, it will be written back, or if it is shortfall, we will provide further and close it. By 31st March, we should be able to get the total the liability which we have incurred on our account of the recall. That we will be able to do it by end of this year. But we do not foresee any much increase hereafter. Almost all the claims we hope that has been received already.
Okay, got it. Sir. Thank you so much.
Thank you, sir. The next question comes from Sakat Kapoor from Kapoor Company. Please go ahead.
Yeah, namaskar, sir.
Namaskar, sir.
Sir, if you could explain to us firstly the seasonality factor in the business. How do the seasonality factor plays?
Sir, shrimp culture, see if you take a calendar year, shrimp farmer starts stocking from after Pongal or Sankranti or because shrimp culture in the cold climate, the metabolism of shrimp doesn't work. So actually it is a seasonal. After Pongal, after January 15th or 16th, they prepare the ponds and they from after the 20th of January, some people a gradual thing, they stock. That goes on up to March, end of March, because the temperature, the higher the temperature is good for the shrimp. The first crop gets over. The people who stock in January, they harvest in April. People like that, it goes on. The first crop gets over by June, and the second crop starts by again June, because people who harvested in May they stock in June. There are two crops. One is January to April, or depending on the stockings. Second crop is from June, July to September, October. This is the pattern of the shrimp culture. Hope your question is answered.
Yes, sir. Sir, in your opening remarks, you did mention about the vagaries of the raw material prices also, with wheat prices and then other than the fish meal prices. So if you could give us some more color of what constitutes the raw materials, sir.
Raw materials is fish meal, soya meal, wheat flour, and we have different almost 20-21 varieties of raw materials, so minute and major. The major are fish meal, soya meal, and wheat flour.
So when we take this fish meal as a major constituent, why have we not looked at backward integration in terms of developing our own fish meal and therefore removing the element of veggies? I think that other players in the same segment are coming up with these ideas, and they're also into the trading aspect into it. So what is our thought in terms of fish meal
Fish meal is done from the marine fish, which is available on the west coast of India. See, the fish meal companies are majorly they specialize in that product. They specialize in their product. See, we cannot do everything. Everything. Fish meal business itself is a big activity which deals with the fishermen community and lot of concentration and a lot of this thing is required. So they're specialized.
Thank you, sir. In terms of time consuming, we are taking 2 questions per participant. We have a follow-up question from Ankar Kulkarni from Shree Investments. Please go ahead.
If you recall, 8-10 years back, there was a Vanamai shrimp which were introduced, and that was a game changer for Avanti as well as for the overall industry. I mean, any such opportunity arising in the future, or that was just a one-off?
See, there's a lot of research and a lot of innovation is going on. Say today, Vanamai, we have earlier our native species is the black tiger.
Correct.
So the black tiger, there was a wild seed which were used earlier by wild seed. Now an SPF seed for black tiger is being produced. So the black tiger is also coming back into the picture along with Vanamai, because Vanamai has been successful because of that specific pathogen-free Vanamai was available. The success rate was very high. Now the specific pathogen-free black tiger seed is also being available because the technology they have developed the seed. and now it is available, and some farmers who are going for that also. And there are a lot of work is being done for blue shrimp and different types of shrimp. That has to come into the commercial viability.
Okay, but there is no immediate, or like say within a year, there is nothing which is happening or on the card.
There's a lot of work is going, sir, I cannot, anybody cannot tell whether it is coming tomorrow or within 1 year. But Black Tiger SPF has come in.
Okay, can you just tell?
SPF seed is available. It is coming. Already people have started stocking SPF for Black Tiger seed. It took almost 10 years for them to develop it.
Okay. Can you just let me know what was the cash in the company's balance sheet as of 31st December?
11 crores. Yeah, we have about 1100 crores.
Okay, and you said majority of that you require for the working capital. I mean, may I know how much percentage of that is required generally, like every year?
It's a seasonal, see, as we answered earlier, this is a seasonal business. In the peak season, we would be requiring around 7 to 800 crores.
How much? 7 to 800 crores.
7 to 800 or sometimes 900, because the availability of the raw materials, we have to book the raw materials, seeing the prices and all these things. There are these things we have to look and keep the stock and keep depending on because all this availability of fish meal or availability of soya. They're seasonal. We have to cover those, and before the prices go up, we have to buy. All these things are there.
May I add something? What CMD said, that by using these funds, we are in a much better advantageous position compared to going for a bank borrowing. So one thing is that we are able to pay our raw material suppliers immediately within 3 to 4 days of receiving the product, and quality control is cleared. So this has given us a lot of advantage in pricing the price front to bargain for good price. That is one advantage we are getting. Similarly, if in the season, what happens is, apart from the raw material required, for example, now January, February, March, the year end, what we do is we credit these discounts to our dealers, so the cash rotation is less in these 2-3 months when we use these funds for all our raw materials. So we procure the raw materials by paying from these funds. So if you compare, really speaking, if you look at the returns today, because of the FD, the interests have gone up, and at the same time, the borrowing cost has also gone up. If you are to use this, it will be a disadvantage if you use the borrowed funds. So we use the same funds for this working capital requirements. This is, in fact, is an advantage to the company and the shareholders also. So we are able to maintain the costs, that particularly interest costs, much lower, almost negligible. So this entire amount, it depends upon throughout the year. Maybe a couple of months we may have some surplus, but does not mean that we have got a lot of cash surplus for a longer period. It was a short period. In almost 9 months in a year, we require these funds.
It is a rotation. I think it's a very the seasonal items. When the crop of soya comes, we have to keep purchasing and all these things. So the money is used mostly for the working capital.
Yeah. In October, November, you get soybean meal. In March, April, you get wheat flour. See, sometimes there is fishing ban for fish meal. At the time like this, every year they will have their own calendar. We have to manage the funds to keep the stocks.
Thank you, sir. That will be the last question for the day. Ladies and gentlemen, we would like to come to the end of this conference. On behalf of KFin Technologies Limited, we would like to thank the entire team of Avanti Feeds for giving us the opportunity to host this call. And we appreciate the interest from the investors and analysts for the participation. Thank you. And if you need any further information, you may connect with Mr. Vivek Jain of KFin Tech at vivek.jain@kfintech.com. Thank you for your participation and for using Doorsabha's conference call service. You may disconnect your lines now. Thank you and have a good day, everyone.
Thank you.